What's up, YouTube? I wanted to do a little quick recap on the trade I took today and the price action that I was viewing. And we're going to start off with the daily chart, right? So, on the daily chart, before we got to where we're at now, price failed to take out this high. So, inside of this volume imbalance, price started wicking lower. So, now what am I looking at on the daily chart other than that, right? I'm looking at consequent encroachment of this wick and consequent encroachment of this wick. If price wants to trade lower, offer pricing a discount because we're clearly bullish on the higher time frame. We had relative equal highs here and we have relative equal highs here. This is my focus and my draw on liquidity. We're getting super close to that now, but I was trying to trade in that direction. So if I'm looking to trade in that direction, what is pricing to do? Well, I need something to get offered in discount, right? So I want price to come lower and trade higher. Now, what inside of that range am I looking for? And that's where these two ranges of wicks come in play. So now zooming into the hourly chart, what I'm looking inside of in this now is I'm looking to see what is the most probable chances or probable places that price can trade down inside of. So I'm looking at consequent encroaching that wick on the daily chart, and I'm looking at, is there a fair value gap that sits right on that, right? And there is. Now I'm also looking like, okay, if price is in a rush to be bullish and trade to the draw on liquidity, what should I look for in price where maybe I don't have to wait for price to come all the way down here? So what I ended up doing was we were trading inside of this high and this low. So this is our range. So this is our dealing range. So here, what did I want to see? Equilibrium, right? What is most probable for price to trade into? Equilibrium of the range. So now I'm looking at this and I'm thinking, okay, is there a fair value gap sitting in equilibrium of the range? Yes, this 1 hour fair value gap. That immediately quickly got my attention. So this is exactly what I'm looking at before market opens, right? Boom. So now I'm taking off all my grading quadrants, all that. So now we're just focused on this fair value gap. Now, how can we zoom in even deeper and get price more accurately? How can we view where price is most likely going to stop? Now, in this moment, I'm now on the 15-minute chart. What I would look for preferably is upper quadrant. I want to see, is there a fair value gap sitting upper quadrant? Now, there really wasn't even on the 5 minute when I zoomed in. That wasn't untapped already. So I grabbed out these two 5 minute fair value gaps that were sitting lower quadrant and I marked them out. Now, this one was filled, this one wasn't. So I really wanted to see this whole thing get filled. And on the 15-minute chart, it came out to be like this. So it was pretty aligned anyways. Now, we're going to get a little closer to the open here. We're going to zoom into the 1 minute chart, which is where I did all my analysis. And we're going to start at the open, right? So right before the open, we had all these relative equal highs, right? Price was trading up, down, up, down, up, down. And as we were doing that, we left a lot of these equal highs. Now, what are two things that we noticed so far, right? Number one, the daily chart's already bullish. Number two, the intraday charts are looking super bullish and we're leaving liquidity, right? Liquidity goes to two things: a premium array, a discount array, or PD array, I should say. So premium PD array, discount PD array, or draws on liquidity. So now I'm focused on drawing liquidity because of the equal high that I mentioned. But now I'm also looking at a discount PD array, which is where we got this fair value gap from, right? So I want to pay attention to a couple things before price got here. Now we're going to actually replay trade this because I want you guys to have a fresh view of this. And I want us to go candle by candle or candles by candles. We won't do exactly candle by candle. But price opens up at 9:30, right? Now we have a little bit of a Judas swing to the downside, and that's exactly what I'm looking for. Now, I want to pay attention to, how does price deliver off of this? Do we have an immediate expansion to the upside? Do we create some fair value gap? Do we do something to show me that bullish price is ready to go now? Well, that doesn't exactly happen. What happens was we leave this little fair value gap, which I won't count as my first presented fair value gap because that's not enough displacement for my liking, right? So what else do we do? Well, inside of here, we leave even more relative equal highs, right? We come up at 9:32 and we fail to reach up here, which is my main focus on drawing liquidity. So now what am I focused on? Where does price want to go? Now we go back to where we started the morning session. We were focused on these discount PD arrays. So now that I see that price is in a rush to the downside, I'm still bullish. Nothing changes. I'm not chasing this. I'm not thinking about how can I catch this short. I'm thinking about where is price most likely going to stop on a dime, right? So now we're going to replay through some time. And now we're actually going to cut this back a little bit. And I'm going to change the speed of this because that's way too fast. We're going to be getting sped up really hard. So price delivers very, very, very strong to the downside. So now, obviously, now there's two highlighted PD arrays that we're going to go over. First presented fair value gap. That's the first presented fair value gap after 9:30. Really between 9:30 and 10 o'clock, the opening range. That's where I look for that fair value gap. Now, again, the reason I chose this one over this one was because this fair value gap actually has some displacement. There's some reason and some matter behind this, right? This actually has an effect. This is so little where I'm not really counting it. And then this is at 929. So I also mark out this fair value gap. Now you're probably thinking, why this fair value gap? I'm a big fan of fair value gaps that take out lows. Those fair value gaps usually play a really big role in price if it's to respect it or to inverse it and then use it to go bullish, right? So for value gaps that take out lows, those are my best friends. I've fallen in love with those this month in my studying. So now price trades lower, right? Now obviously you see that with either fair value gap. Now price didn't close outside the fair value gap. Sometimes price is going to have this coloring outside of the line moments like a little kid, right? If the little kid colors something for you and it's not going to be perfect, right? That's just how little kids are. Same thing with the markets. It's not going to deliver perfectly all the time. There will be times where it's like to the tick beautiful, and there's going to be times like today. So my mindset in this moment is, how is price going to react? Now that we filled up the fair value gap, how is price going to react, right? Now that's what I'm focused on and that's what I'm looking at. So in this very moment, I wait and I pay attention to this. I love this reaction. We fill this fair value gap. Now, something I didn't even mention because I don't want to get too complicated, but I also look at regular trading hours and I'm looking to see inside of this opening range gap, right? Inside of this gap. So from this close to this open, price came down and filled up consequent encroachment of that gap, right? We filled it up. So now we're rejecting at a place where price should be rejecting inside of a discount PD array, and we're displacing. So these three things, it's telling me now bullish price is ready to go, right? Because it's time and price. So now I'm seeing, okay, things are now, the story is unfolding. Things are making a lot more sense. So I end up buying long as we trade through this fair value gap. Now, I don't usually recommend that. I actually just started practicing it. That's not something I'm really too used to, but I'm trying to get used to it. And there we go. And that's my profit target, and I'm risking below this fair value gap. Now, a lot of things go on here, so I don't really want to keep this on here like that. I'll probably keep it like that. So now I'm looking at a couple of things. So now I'm inside my entry, I'm paying attention to this first presented fair value gap. Now I'm really waiting for the macro 950, 1010 macro for price to spool. I'm okay with us trading inside of this range until then. Now, what I'm going to do as price is doing that, I'm going to pay attention to what's holding, right? Inside of all that little consolidation, little confusingness where people are scared of the trade losing and all that, I'm looking to see what PD arrays are holding behind the scenes. That's my focus, right? So I'm looking at first presented fair value gap, and now I'm looking back at this inversion fair value gap, right? Why am I looking at this inversion fair value gap? Again, it's the one that took out the low. These usually always come back and play a role some way in the market. So that's my focus here, right? So we're going to play a couple candles right there, right? Now, notice two things. Where do the bodies close on these two candles? Upper quadrant, this upper area of that inverse fair value gap. That's a really bullish sign. Now, the wicks did come lower, but what are we going to measure to see what's still holding? The wicks didn't even make it into consequent encroachment of this fair value gap that displaced after we came down and filled this. So now I'm seeing two bullish signs that price is ready to take off and go, right? So now, even though a lot of people are like, dang, we're holding this fair value gap and we came down, and a lot of people are probably a little bit more scared. Even me a couple months ago would have been like, all right, this trade might not work out in my favor. I'm still confident because I'm paying attention to the little details in price, the little hints, the little tips that price will give you as you're in a trade, right? And sometimes it'll give you tips that your trade's not going to work out, and that's where risk management comes in. But in this moment, I'm looking at price is still showing me that we want to go higher, right? So now I'm focused on this, right? Now we have displacement. I'm in 9 contracts. This high, I want to see get ran through like an OnlyFans model. Just need to get ran through. So here, I actually buy 2 more contracts in, right? I bought 2 more contracts inside of this fair value gap, and I move my stop loss to the lower quadrant. So I was completely beneath the fair value gap. Now I moved it to the lower quadrant because fair value gap, this price already did its damage inside this fair value gap. It already did what it was supposed to. I don't need it to play around in this fair value gap anymore. That's not what I want. We already did our damage in there. Now I'm buying this fair value gap because I like that it's the first one to displace outside of this inverse fair value gap. ICT has mentioned multiple times the fair value gap that displaces outside of an inverse fair value gap is most likely going to get used to go higher or lower, depending on what you're trading. But in this scenario, higher. So I'm focusing on that. That's my focus in this trade. So now, pay attention to time. It's 9:47. So in about 3 minutes, and I said this in my video, I want to see price start to spool and take off towards the upside. That's my complete focus. I want to see us rip through all this price. I had a partial here, I had a partial here, and I had my full TP here. Now, I'm going to let price play through all the way till we take TP, and I'm going to go ahead and show you how price moved at the end. So now I'm moving my take profit and stop loss to where everything was at. So this is what the trade looked like. We're going to go ahead and spread this box out. And we're going to go over price at the end because there's not much to go through. It's just kind of high resistance liquidity run. So now I'm paying attention to that first presented fair value gap. What happens inside this fair value gap? Rip. Just like a hot butter knife, right? What happens to this liquidity? Same thing. And it's just a hot, beautiful run straight to liquidity. And it was just a beautiful trade today. Made a lot of sense. Very easy. I hope you guys enjoyed this video. This is paper trading. If you don't know, I've been paper trading all of January. I plan on starting a new series in February. I won't drop the name yet, but in February, I go back to live trading. And my goal is to get a payout in February or March. Just following the same concepts I'm doing now, same risk to award. And I'm very excited. So with that being said, I'm going to go ahead and show you guys now the trading footage that I had from earlier. Hope you guys are having a good trading month. Hope you guys have a good last week of January. Hope you guys are safe and sound. May the Lord bless you. I'm buying inside this inverse fair value gap because of the speed we had. I'm risking below that fair value gap. And I'm targeting back to this high. So about 1 to 3 RR. And the same reaction I got from this fair value gap, I want to see in this first presented. So there's a lot going on, but it's gonna make sense when the trade's over and we review it. I want to see the exact same speed coming through this. Now, I'm going to take out about 6 contracts right here. I want to take out about 6 contracts right here. Now, if this candle is going to act like this with the first presented, right, what I want to see is in one candle, can we immediately replace this down close candle? How do the characters move around inside this inverse fair value gap? Those are the 2 questions I have for myself. How are we moving inside this inverse fair value gap / upper quadrant of this whole range here, which this purple box was? I completely forgot what it is at this point. Or are we going to have speed? And this is my last place for price to stop. I want to see if we could work to that first presented fair value gap. Now, if that first presented fair value gap is going to work, we're going to get pushed and create newer lows. So I don't want to see speed and like we're kind of seeing now. I want to see us kind of start to reject. Those are the questions I have for myself looking at a trade like this, especially because I'm so bullish. Again, we failed to hit consequent encroachment. We had a Judas swing. Now, the thing is we opened higher on regular trading hours. So it looks a little opposite compared to like 9:30 open here. 9:30 open. We don't, I guess we kind of have a Judas swing there, but this is a much more significant move that people are going to break out here. And I believe that we can start to rally higher. I think it's now time for price to do it. So my question is going to be, can these candles get rinsed out That would be my question. No. I wouldn't want this to keep happening where a new low get put in. It's usually a bad sign. I'm going to pay attention to consequent encroachment of this fair value gap. If we start to break here or play around here, I'll take some of my position out. This is the lowest point I'd want to see price go to. Now we're starting to get some of a nice bullish reaction. I want to see if price has it in it to go and trade above this high. Yeah, that's kind of the speed I want to see there. So now I'm paying attention to mentally the wicks, right? Well, this wick, I'm paying attention to where is price respecting. Now, I like that we ran through these quadrant levels like a hot knife. Now, this is for me what needs to get ran out, and I want to see some speed above this high. Now, I don't want to see this high get taken like this, and then no, right? That's not what I want to see. I want to see price with speed go through it and then take out these relative equal highs. So right now we're respecting consequent encroachment of this wick. Now, really, I'm expecting this trade to spool in the next 4 to 15 minutes. That's kind of what I'm expecting to see. That's kind of what I want to see. Once that happens, I want to see these fair value gaps fail and change sides. So now we're starting to get a delivery through here, which is really nice. Now, if you didn't get my entry where we traded through, which I'm not even fully comfortable with that yet, I don't know if I would have took that live. This here is a re-entry. This here is a more, but this is a buy. This is a buy. Now I could have bought more in. I'm thinking about buying here inside of this fair value gap. So I'm gonna buy 2 more. All right, and I'm gonna risk about lower quadrant right there. So I just bought 2 more in because we hit this fair value gap. And we'll take about 4 out right there. So we hit this fair value gap. And now that should really push price to work above this high. Remember, I'm looking for speed. I want to see speed above this high. Let's move this out the way. So now we're getting to that macro that I'm looking for. And I really don't want to work anything lower else in this range. I kind of just want to blast off at this point. I'm paying attention to where price is not, where it's not trading through, right? I want to see if we can stay upper quadrant of this wick and start to deliver off of that. There we go. There's a speed I'm looking for. I don't really want us to wick like that. I want to see us continue taking off. So we were to slow down here. That would be the opposite of what I'm looking for. But we'll see. We're about to open up this macro and we'll take a look what price wants to do. I really want to start seeing candles open up here and not so much here. So now we're inside that macro. Not saying it needs to spool now, but I would prefer that. And there we go. That's exactly what I'm looking for. Now I need price to get some speed and trade up into here. I want to pay attention to how are we using the quadrant level of this first presented fair value gap. Is it bullish? Is it bearish? What's the focus on that? So there we go. Now we got to open above. It would be even better if we just took off with speed and we didn't even have the willingness to trade into it. But I'm still allowing room and space for it to use that first presented fair value gap. So any rebalance here, I'm not too upset with. All right. So we're out there. I have 5 contracts. I think this is a good place to risk below here. And we should be out 4 there. I don't know if it's just doing that little lag thing. I'm going to break. And at this point, just let price trade into what it wants to trade into. I don't know why we didn't get filled there. Just have 4 ready to go. Okay, I'm going to pay attention to if we leave this as a fair value gap. How does price respect that? Close my 4 out. If we work lower quadrant of it. And then my last runner will just be sitting there. What an edge that was. Now, if I could see my stop, redeem my stop, I'm just going to risk around from this low to this high. Just above this fair value gap. And I'm going to take consequent. Oh, never mind, twin. Should be where I'm out. All right. Beautiful trade, beautiful day. Holy crap. Doesn't get no easier than this, twin. Holy execution. That being said, see you guys in the next one.